Hey, my name's James Nicholson. Welcome to my YouTube channel. Now, the Bank of England has done an in-depth report on mortgage lending and the state of it at the moment, and it's actually quite good. We're going to talk about arrears in this video. We're going to talk about the amount that people are borrowing, and is it affordable at the moment? Is it really going to continue like this? Well, looks like it is. So in this video, I'm going to talk about all the data from the Bank of England. This is interesting to me. This should be interesting to you because this gives you an indication on how strong and stable the market is at the moment. Because if there was going to be a crash looming anytime soon, we'd start to see cracks at this level. We'd start to see arrears going up. We'd start to see affordability struggling. So we'll talk about all of that in this video and much, much more. Now, if you're new around here and you haven't done before, do make sure you subscribe to the channel over there and hit that bell notification. We've just hit 52,000 subscribers. And by subscribing, you'll get all the latest property news, Bank of England news, house price news, interest rate news, and much, much more. And let's get some views on this video. Your part in that is simple. All you need to do is smash like, tickle like, do something to that like button. That really helps with the YouTube algorithm, and that really does help the channel grow. So thanks to everyone that does that. So, what is going on? Well, lending's up. And it's not up a little bit. I want to talk about what's going on here. So the amount borrowed at the moment, the debt, mortgage debt that we all have stands at 1.73 trillion pounds. And that's up year on year 2.9%. So not too much of an increase there, but it is actually getting a lot more in more recent quarters. So that's the rolling 12-month average. That's pretty much 2025 now, considering we're in December. But what the Bank of England is saying, there's a mini boom, that's their word, in lending at the moment. So what they're saying is in new lending, they are seeing a mini boom. And what does that mini boom involve? Well, they're saying new lending is up to 80.4 billion, which is a lot. And this is why they're calling this a mini boom, is up 36% in just the quarter. 36%, because the market slowed down massively after that stamp duty rise that we had. But this isn't just new lending, it's also refinancing. It's anyone that's taken out new money for whatever reason. Now, that's the biggest increase since 2020. So it's been a while since we had that. Compared to the quarter last year, it's up 22% year on year, just to give you an idea. And so what we're saying there is that, look, people didn't borrow last year because interest rates were high. They held off on stuff. Now they are borrowing, and so that's growing. Now, what about the pipeline? Because this will indicate where things are going. Well, the pipeline for mortgages at the moment is high as well. And so this shows that the next quarter is going to be strong because the deals being worked on at the moment are 79 billion currently being worked through with lenders at the moment. And that's 1.6% up on the previous quarter as well. And that's the highest, again, since 2022. Really, really high. So what they're also saying is a lot of this is because of riskier lending. So they're taking riskier bets now, and that's because the government has told them to. So the Financial Conduct Authority was pulled in, had a meeting with the government and told, look, you need to relax lending criteria because we're not lending enough money at the moment. And clearly this happened in the summer, early summer. This happened, and clearly this is helping people get access to funds at the moment and be able to borrow, remortgage, repurchase stuff, whatever they're looking to do with this, they're able to do that. And so the Bank of England said, we don't want you to go back to, the government said, we don't want you to go back to 2008 levels. I had mortgages in 2006, 2007. They were self-certs. I can remember clearly having meetings with my broker where you just told them a number and it wasn't even checked. Your income wasn't even checked on what we had called a self-cert mortgages. Back before 2008, your house could be worth 100 grand. They'd lend you 110,000 pounds. So they'd lend you a mortgage of 100,000 and a loan of 10,000 on top of that. And people were supposedly meant to put new kitchens, new bathrooms and increase the value. Or the bank just figured out eventually this would go back up. But what people did was they bought holidays, they bought cars, they bought clothes, they bought lots of luxury items. And then the house prices start to drop. They owed 110, the house is now worth 80. They said, not for me, take the keys back. And that caused what was that bank called? The one that turned into Virgin Money. I'm sure it's called Black something. Tell me in the comments, you know. I can't recall while I'm on here. As soon as I finish this video, I'll remember. But yeah, it caused a run on banks. There was uncertainty. But we're not going back to that level. So lending has got riskier. And what they mean by that, which I did a video earlier this week, there is now more 5% mortgages and 10% mortgages that we have seen since 2008. It's the most since 2008. But there is still stress tests on those. It's still harder to borrow money than it was in 2006, 2007. So people will be able to afford those mortgages, but it's just a slightly more risky profile. If we went into negative equity, people might say, well, I don't want to pay this. I don't want to pay it. Take it back. Repossess the house. So that's interesting. What's also interesting here is arrears. That's interesting because I think arrears is something we really got to keep an eye on. But they're down. They're actually down 2.9% at the moment, which is good. That's moving in the right direction. It means people are getting on top of their mortgages. You see, affordability's improved. You've got interest rates that have dropped as well. So you might have people that were on a 6-7% rate that have now refinanced onto a 4% rate, got up to date with their arrears, and that really is going to help a lot of people. The amount of people in arrears at the moment is 1.2%, which is good as well. And that's the lowest since 2022. And if you think about it, after the pandemic, after people were furloughed, there would have been a lot of self-employed people that just didn't have income. They missed out on furlough. They missed out on bounce back loans. Some self-employed people fell through the cracks. And those people would have struggled with their mortgages. Other people would have struggled because their businesses were just shut. They still had to pay rent. They still had to pay other costs, even if they had a bounce back loan. And so, yeah, it does look good that arrears are dropping. Even though we're lending more money, that is a positive sign. And it shows the market is more robust than you might think. Let me know what you think about this. It's interesting when we get this data from the Bank of England. Do comment below, do like the video, and check out all the other videos, nearly 2,000 of them now, including this video right here.